welcome back in the podcast today. We have another special guest. She's coming in for the second time, and we're going to talk about advanced questions for insurance for primary residence. So today we have Jane Mortimore from Allstate.
That's
How's it going,
right.
Jane?
Allstate. Good to see you again.
They already know about you. If you want her information, it's in the link in bio, and we'll give it out at the end. But we're going to jump right in because we have lots of questions and a lot of information to cover. You ready?
All right.
A little
Fire
rapid
away.
fire.
Yeah.
All right, so if you haven't checked out our first video, we did one that's like a general questions. If you're in escrow, what to look for, who to talk to, some questions to ask insurance agents. But now these are more advanced questions that we want to cover today. So,
All right.
first question is, I just did this. Is it wise to video all your belongings in your house?
Yes, absolutely. I always advise my clients to take inventory of what they have, because typically, if you think about it, you've got so much stuff in every room, and if you had a fire, I don't know about you, but I would probably only remember that I had a couch, a dining room table, and a bed and a TV. I'd suddenly forget about everything else that I had. And it's even all the small things that are in the cupboards. So things in the kitchen, things that are in your garage, things that are in your sock drawer. So I say take video of every room and everything, and even talk maybe while you're doing it, because you might be able to just discuss a few things about, oh, when I bought this or how much I paid for that. I recommend video, photographs. I recommend keeping a copy as well off premises, so maybe another family member can have a copy of that for you. And I also recommend keeping some documentation, especially of big ticket items. So if you've made some purchases and you've got invoices or records of that on your phone or your computer, just making sure that you keep that kind of information as well. But inventory and video is the easiest way to do it.
And it's so easy with iPhones now. You can put it in iCloud, leave it there, and you can either send it to somebody so they have a copy.
Exactly.
But get it done, because if you do have a loss, it's easier to remember and get reimbursed for those items. Correct? Yeah,
it's a lot easier to be able to talk when an adjuster is going to be talking to you. It's a lot easier to be able to help them know, what is it that you had and how are we going to replace this.
That's a pro tip. Record and video.
Mm-hmm.
And take photos of your stuff. Inventory it. So,
inventory, yes.
Next question. Good job. We've had this situation come up a lot, just because if we have sellers moving, typically they may need a week or two more to stay in the house. Mm-hmm. So what we're asking is, because we see this a lot, we want to make sure you're covered. What should I look for when considering a short-term rent back in the real estate transaction?
Absolutely. This is becoming more common. I've seen this quite a bit in the last couple of years. So when somebody's selling their home, but then because of the timing of closing, they may then sell it and the home's closed, but they then are just renting back and staying in that house for another 2 weeks. So what they need, their own homeowners insurance, it's not valid once they've sold their home and closed to someone else. And someone else now has ownership. So what they have to do is they're going to have to get some renter's insurance. That is meaning that they're buying insurance to cover just their belongings.
Right.
So if they're staying in the home and they've got still some belongings, or they even have some belongings in storage as well, a renter's policy will cover them for that.
It's so cheap. She just did one.
Very inexpensive.
We just did one for 2 weeks. It was like $30. And that was, we're going to get prorated back. So
yeah, exactly.
Just keep in mind that your insurance is no longer valid once.
Yeah. Homeowner's policy, once you sell your home, that homeowner's policy is void. It's ended. You would not be covered if you filed a claim. So you have to be aware of that. That structure in that home now is going to be insured by the new owners. And so you're just going to need some coverage for your own belongings and have some liability coverage for yourself as well, and other benefits.
So renters, once you become a renter and a tenant policy, you got to get one. You got to get a tenant policy to protect yourself, because you're not covered by insurance. That's a big
Even
misnomer.
if it's 2 weeks, things can happen anytime within a 2-week window. It's easy,
cheap too.
Exactly.
Very and it protects you and the new owner, so that just kind of covers your stuff. So, let's talk about flood insurance. how do you know if you need it? We talked about a little bit about this, but how does...
How I always say that with flood insurance, I always say wherever it rains, it's a flood zone. Some areas are just more higher risk than others. If you want to go onto the FEMA website, that will tell you exactly what type of zone you're in. If you're in zone X, that is not typically a high risk. But if you're in A or AO or E, those tend to be a bit more high risk. So I always recommend that even though your homeowners, a regular homeowners policy covers a pipe bursting, it does not cover water from the outside in, and especially groundwater. So if it's coming in groundwater, that is not covered on a homeowners. So I highly suggest you take a look at flood insurance. And I say it can be very inexpensive, or can get expensive depending on the risk level of where your home is located and what zone that you're in.
So a good realtor should be helping you with that. But
Yes.
just keep in mind
Yes.
that if you, just because you're not in zone X, does not necessarily mean that you are out of danger.
No, exactly. We can have, when we get rain, and it can rain for days, on end, or just some flash flooding.
Flash flooding, that's the big
Flash flooding, really, and that can happen anytime. That's why it's wise to to look at that. So.
Yeah, analyze it.
Yeah.
Weigh
and
pros
you
and
can
cons.
get very low coverage all the way up. With flood insurance, the maximum is $250,000 for the structure and $100,000 for contents. But you can get something as low as just $20,000. And when you think about it, the type of damage that flood does, which can be nasty, but it doesn't mean your home is a total loss.
Right.
So you may just be able to purchase some, coverage where you're having a little bit of coverage, but you're not having to get as much as $250,000, which might be more expensive. So I had this with a client recently. On one of his rental properties, and just in our discussions and running different options for him, we were able to get something that was affordable for him that still gave him some coverage.
Right.
And protection.
Great. Okay. Now we're talking about flood insurance. These are additional coverages, a little more advanced topics. All right. So now into our next topic. We are talking about additional coverages, obviously, and now I want to know more about earthquake insurance. Do lenders require it? When is it required, or when do you see people taking it? And what's the deductible on it?
Yeah, so earthquake is actually something I don't see typically required by a mortgage company. It really tends to be just a personal decision from the insured themselves. I tend to see people that move from California ask about it more because they're more, exposed to it, they're more familiar with it. And then even though we are an area, our state is quite active, and we, are up there with Alaska and California
that's
for...
Beautiful point. We are in a seismic zone 4, the highest you can go.
Oh, right,
So,
exactly. Aren't we on the
so
San Andreas Fault line or something like that?
I don't want to comment on that. I don't know.
Okay.
Those are my engineering days. Those days are long gone. I'll leave that to the experts. But we are in some Sierra faults for sure.
So as far as earthquake goes, it is always a conversation to have because it is a very high deductible. The minimum deductible that you can have is 10%. So if you have coverage on your home, a dwelling coverage up to $500,000, that means that you've got to have at least $50,000 worth of damage caused by that earthquake before they would even consider paying anything out. And then again, it's going to just determine with the cost effectiveness of it, whether it's, whether you want to go with that based on the price.
Right.
So it is a high deductible, a lot higher than regular homeowners insurance, but it is something to consider. We don't get a lot. I probably have a lot more people ask about flood insurance than they do earthquake.
Right.
So it isn't something that's terribly common here, but for sure we do write it, and we do get, people asking about it.
The other thing is to consider when you're considering this from my engineering perspective. Check what the material of your house is made. How old's your house? Because a house built in the 1940s out of brick may be more susceptible to an earthquake than a house built in 2020 because
Yeah,
the standards have
because
gone
the
up.
building standards,
And
exactly.
I'm not saying that they built bad houses back then. They just didn't have the codes.
Yeah,
in
the
place.
building codes, because we have the building
So
codes now.
keep that in mind if you have an older house and you're getting close to paying it off. It's something to consider.
Yeah, absolutely.
All right, so now we're done with flood insurance, earthquake. Now we're talking additional liability coverage. And what always comes up is the question I have is what is an umbrella policy and how much can I get and why do I need it?
It's a great point. I feel like everybody should have a personal umbrella policy. For what they provide, they're very inexpensive. The minimum and what most people do is probably $1 million, but you can go up as high as 5 million because it's all based on how much assets, how much you have to protect. And the reason I highly recommend an umbrella policy is because it gives you the excess liability coverage above the limits already on your policy. And because we see how expensive medical is these days, we just know that if you only had 50,000 in liability on your policy and you injured someone,
An accident,
we know that if they had to go into the hospital or be in there overnight, it's gone. It's already exhausted. So if your coverage on your insurance policy is already exhausted and this other person has medical bills and just rolling in, what they're going to do is hire an attorney and they're going to come after you personally. They're going to garnish up to 30% of your wages every month. They can go after any assets you have and they can go after future earnings as well. So in order to protect yourself, I recommend just higher liability coverage on your auto policy or your home policy anyway, and then purchasing an umbrella. It sounds like it would be a lot of money and very expensive.
It's not, isn't it a couple $100?
It really is not. It could be as inexpensive as $20 a month to maybe $40, $50, depending on how many drivers you have in the household, depending on how much coverage you need. But I always say for the price of a takeout pizza or a meal each month, you should highly recommend getting a personal.
And we'll talk about rentals, but just get it. And it's so inexpensive. And these days,
absolutely,
$1 million can go quickly.
Oh, it can.
She's probably seen it.
So. I see it with claims every day, and I see that families can be financially devastated. This is a way to protect and give you peace of mind, help you sleep at night. Ideally for people, especially insuring their new young drivers. The minute my kids passed their driving test, the first thing I did was write myself an umbrella policy.
Right.
I don't want to risk losing my income and my home, so... And then that would be another thing, would be getting your home homesteaded, and that's maybe another...
Yeah, well, we cover that.
Another conversation,
no, that's
another
excellent.
time.
Homestead your home.
Homestead.
You can't be our client and not have your house homesteaded. That's not in our rules, and we
definitely
make sure.
Should do that.
Yeah, it's 600. It's like 600,000.
Yeah.
615,000 of coverage. So
equity.
we'll cover that.
Yeah.
We have an attorney coming on to cover that, and I'll send it to you and send it to your clients. The next question I have right here is, we're talking about umbrella. Do I have enough liability coverage? How do you know?
It's just related to what I just said. I don't know if you can ever have enough, but what I typically would look at is how much are you worth? What assets do you have? How much could you lose?
Question that started to take off is, if I'm worth $2 million, I'm not saying I am, but what kind of insurance policy should I have for that?
Well, you should have at least a $2 to $3 million umbrella policy.
Okay.
If that's the assets you have based on your retirement, your savings, the income, how much you make. But even people who don't make that much money can still get sued. Right. We actually had somebody within the Allstate family, not in our agency, but within the Allstate family, who injured a doctor in a car accident. And of course, because that doctor could no longer use his hands, and that's how he made his income, now this person is paying off this debt for the rest of his life because this person, he's losing his future income, and what he can't do, the income he would have brought in as a surgeon, he no longer can make. So this is how you can get sued. So this is what can happen.
Umbrella policies,
very, very important coverage.
And inexpensive.
And very inexpensive.
All right, so good topic. we're all about protecting our assets, especially your home. Last question, and then we're going to move into, we have a different one coming up. First one, the last question is, am I fully covered if someone is injured on my home? Is injured at my home?
Yes, as long as so we have it can depend. There's a couple of coverage. You've got guest medical. So if you had a guest, a visitor, a friend, or a relative visiting your home, that typically most insurance companies offer up to about 5 to 10,000 in guest medical. Just in a situation where, say, you have your young kids have friends coming over and they're running around and they fall over and chip a tooth. So there's coverage for those kinds of things. But there also is liability if it escalates more into a lawsuit type of issue, then where attorneys are getting involved. So you've got some guest medical and then you've got liability coverage. But to say, do I have enough? Again, that's a conversation to have with your agent so that we can kind of look at what your needs are and look to whether you do need to get that umbrella. But most homeowners policy will have a limit, and I recommend you just go up to the, say, to 300,000 or 500,000 limit on a homeowner's condo. And then the guest medical, I would definitely take advantage of having the 5,000 or 10,000 in guest medical, and it's very, very inexpensive.
Okay. So we're just trying to protect your biggest asset and working hard out there, so we want to protect you. Yeah. Jane, thanks for coming in.
Yeah.
Good job as always.
Always
we'll have another one coming out for specifically landlords. Okay. Give me what's the best number, and then we're gonna put her stuff in the link in bio below. So click on it, take a look, give her a call.
All right, probably my cell 775-742-4194, but the office phone number is 775-626-3400.
Okay, Jane, thanks for coming in, sharing your knowledge, and we'll keep an eye out for that video on landlords and policies.
All right.
You guys have a good week, and we'll look forward to talking to you soon. Thanks.